Hello viewers, welcome to my channel. I'm Hashim Ali Khan. So presently I'm giving the lectures on the subject Income Tax 1 for the assessment year 2021. Already two videos I have prepared on introduction. So hope my regular viewers have already watched those two videos, because these are the introduction basic provisions I'm explaining in these videos regarding the Income Tax Act 1961. Without understanding these basic provisions, we cannot be able to solve the problem under different heads of income. So before going to solve the problem on income from salary, income from house property, profits and gains, all these, you must know the provision of Income Tax Act. These are the basic foundation. So don't skip the video in between. Watch till the end. These videos are very important. If you overlook these videos, then definitely you will find difficulty in understanding the main problems. So have some patience, take some interest, concentration, focus, and watch the video. And if you are new to my channel, I suggest you to visit the playlist of my channel. I have uploaded the videos of so many subjects, so many topics. Select the subject, select the topic, watch the video, increase your knowledge. Now, in this video, I am starting with the topic gross total income. The concept gross total income. The gross total income is the aggregate of incomes under the different heads. Income Tax Act has divided all the incomes under 5 heads. Income from salary, income from house property, profits and gains of business and profession, capital gains, and income from other sources. These are the 5 heads of income. So individually an SSC has to calculate separately how much is income from salary, how much is income from house property, then profits and gains, capital gain, other sources. After calculating, we'll take the total. The total of all the 5 heads is called gross total income. Secondly, total income. From gross total income, some deductions are available under section 80C to 80U on satisfying some conditions. Example, so many deductions are available from 80C to 80U. For example, 80C. The deduction under section 80C is given for qualified savings. We'll discuss more in the coming videos. The qualified savings. 80D, medical insurance premium. 80G, donations. Like this, so many deductions are available if the SSC is eligible to get the deduction. So from gross total income, we deduct all the deductions from 80C to 80U. The resulting figure is called total income. From total income, deduct the basic exemption limit. We'll get the taxable income. The basic exemption limit for non-senior citizen, 2,50,000 for the current assessment year. For non-senior citizen, it is 2,50,000. So deduct. From the total income, deduct the basic exemption limit for non-senior. Example, non-senior citizen, 2,50,000. Deduct 2,50,000. The resulting figure is called taxable income. Next comes elements of tax liability. For the current assessment year, that is 2021, we have 3 elements of tax liability. First, we have to calculate the basic tax on the total income. First of all, we have to calculate the basic tax on the total income. To basic tax, we add surcharge if it is applied. Surcharge will not be applied to every SSC. Only under some conditions. I'll explain you the conditions when surcharge will be added. So, to basic income tax, add the surcharge. To the total, you have to add the health and education cess. The 3 elements are there in the tax liability. First, basic income tax. Secondly, surcharge. Thirdly, health and education cess. After computing the 3, totaling the 3, then we'll get the tax liability. Then health and education cess at the rate of 4% shall be calculated in the total income tax. That means for the current assessment year 2021, the rate of health and education cess 4%. It is compulsory to be added to income tax. So on what we have to calculate 4%? On the total of basic income tax plus surcharge, if there is any. If there is any surcharge, add the surcharge, then resulting we add 4% health and education cess. Tax due. How much is the tax due now? So first you need to calculate tax liability. From the tax liability, deduct the TDS. tax deducted at source. TDS stands for tax deducted at source. So many SSCs will get the net income after deducting tax. For example, if Mr. X is working in a company, in a department, his monthly salary is 50,000. So according to the provisions of Income Tax Act, the employer will deduct the tax amount from his salary income and the net amount will be paid to him. So the tax is deducted at source itself. That is called TDS. So if an SSC is having the TDS, deduct the TDS from tax liability. Then deduct the advance tax. According to the provisions of Income Tax Act, the SSC has to pay advance tax during the previous year itself. So when advance tax is already paid, it will be deducted from the tax liability. The tax due is equal to tax liability minus TDS minus advance tax. Then if TDS and advance tax is more than the tax liability, sometimes it may happen. Suppose the tax liability is 1 lakh rupees. The TDS and advance tax both paid are 1,20,000. Suppose I am the SSC. When I compute the tax liability, my tax liability is 1 lakh. But already TDS deducted and advance tax I have paid 1,20,000. Already 1,20,000 I have paid, but the tax liability is coming to only 1 lakh. That means in this case there is a refund of tax. Income Tax Department will refund the tax to the SSC. This is called refund of tax. So these are the basic things you have to remember. Gross total income, I have explained you total income, taxable income and elements of tax, basic income tax, surcharge and education, health and education cess. Now for determining the tax liability, SSCs are classified into 3 categories. You have to remember, students particularly, you have to remember 3 categories we have classified the SSCs. Non-senior, senior and super senior. Because the tax liability will be different, provisions will be different. Non-senior citizen. An SSC who reached the age of 60 years, up to 60 years, the person is called non-senior citizen. Over 60 years, but up to 80 years, below 80 years, over 60 years, below 80 years, he will be called senior citizen. 80 years and more, 80 and above are called super senior citizen. The rate of tax, the provisions will be different accordingly. So you have to remember, up to 60 years, non-senior. 60 years to 80 years, super senior, senior person. Then 80 and above, super senior. Then classification of individuals. So broadly we divide the individuals into resident and non-resident. Again, in the coming video, I am going to explain you about residential status. How to find out the residential status of the SSC. Because the tax liability depends on the residential status. So from tax point of view, all the SSCs are classified into resident and non-resident. For resident persons, all the incomes are taxable, whether Indian income or foreign income. Briefly, broadly, I am explaining you. In detail, I will explain you afterwards. So if a person's residential status is resident, he will be taxable not only to Indian income but also foreign income. Both are taxable in India if a person is resident. If a person is non-resident, he will be liable to pay tax only on Indian income. Foreign income, he is not liable to pay tax if he is a non-resident. In detail, I will explain you in the coming video regarding residential status. Classification of incomes. Incomes can be classified as casual income, special income and normal income. Casual income. Casual income is an income which is received by an element of chance. Luckily we got it. All of a sudden, unexpected income. So this type of incomes where there is an element of chance, it is called casual income. Example of casual income: winning from lottery, winning from races, horse races, crossword puzzles, games, TV shows and dip games, crossword puzzles. All these are called casual incomes. So on casual incomes, there is a flat rate of tax 30%. Next comes special incomes. And one more thing, no basic exemption will be allowed in case of casual income. No basic exemption is applied in case of casual income. Now special income. Special incomes are those incomes where a flat rate of tax, a concessional rate of tax is applied. Flat rate. And again, exemption will be allowed here. No exemptions, basic exemption is allowed in casual income, but basic exemption is allowed in case of special incomes. Example of special income is long-term capital gain, LTCG. Right now you just listen that LTCG. What is LTCG? I'll explain you in the coming videos. So for long-term capital gain, LTCG, there's a flat rate of tax of 20%. It is called a special income. Then normal income. Any income which is neither casual income nor special income. An income which is neither casual income nor special income is called normal income. On normal income, slab system will be applied. Different slabs will be applied for different incomes with different rates. So that is called normal income. And basic exemption will be allowed in case of normal income. Now, rounding off of incomes under each head, total income and tax. Income Tax Act has given the provision to round off the total of income. When we calculate the total of income under each head, income from salary, income from house property, if you are getting fractional values, then you have to round it off. For example, if you are getting the total income from salary as 1,50,000 point something, 0.75. So don't write 0.75, fraction value is given. So round it off to the next 1 rupee. Next 1 rupee. If the last 0.5 or more is there, to change it to next higher income. Example, the total income is 1,50,946.75. 1,50,946.75. This is the income, total income under the head salary. So now we have to round it off. According to provisions of Income Tax Act, round it off to the next rupee 1. Rupee 1 means 46. Instead of 46, we have to take 1,50,947. 947 I am taking, not 946. Because after 0.75 is there. If 0.5 or more is there, then next higher 1 rupee. If less than 0.5, we take the lower of 1 rupee. Example, if it is 946.45. So ignore this 0.45 and take it 6 here. 1,50,946. This is the rounding of incomes. Whereas total income, when you round off the total income, then you have to round it off to the nearest 10 rupees. Nearest 10 rupees. Example, suppose if you have calculated the total income comes to, let it be 9,45,467. 9,45,467. This is the total income. Now you have to round it off to the next 10. Next 10 means last 67 is given. 67 means next 10 comes to 70 rupees. 70 rupees. So instead of 9,45,470 will take. Immediately next 10. 60, then 70. So 70 is the higher. If it is only 64, 9,45,464. So next one is, here we'll take 60. We'll take 60. Like this, we have to round off the income. Same is the case in case of taxes. Taxes also should be rounded off to the nearest 10 rupees. Nearest 10 rupees. These are the provisions regarding rounding off. Now surcharge. See, surcharge is a tax on tax. When the government wants some additional revenue for a short period of time, temporarily the government needs additional funds, they may put additional tax on tax. That is called surcharge. But surcharge will not be applied to every SSC. If the total income exceeds 50 lakh rupees, up to 50 lakh rupees total income during the previous year, no surcharge will be applied. Up to 50 lakh. Over 50 lakh rupees, surcharge will be applied. So if a person's total income is more than 50 lakh, but up to 1 crore, from 50 lakh 1, exceeding 50 lakh, it is saying exceeding 50 lakh, not up to 50 lakh. exceeding 50 lakh and up to 1 crore rupees, 10% is the tax surcharge. So this 10% will be calculated on basic tax. So first we have to calculate the basic tax liability. On that tax, you have to calculate 10% as surcharge. If the income exceeds 50 lakh up to 1 crore. If the income is exceeding 1 crore up to 2 crore, exceeding 1 crore up to 2 crore, the surcharge will be 15%. If the income exceeds 2 crore up to 5 crore, it will be 25%. If the income exceeds 5 crore, then surcharge will be 37%. So, if the income is exactly 50 lakh rupees, no surcharge will be applied. No surcharge up to 50 lakh total income during the previous year. These rules you have to remember. These rules you have to remember. While solving the main problem, you should remember this point, whether surcharge is applicable or not. Now, tax rebate. Tax rebate under section 87A. Tax rebate is a concession in the tax for lower income assessees. All the assessees are not rich assessees. Some assessees are there whose income is low, lower income group assessees. For them, the government has given some relief, some concession in the tax liability. So, to whom it is given and how much it is given, now I am going to explain. Tax rebate under section 87A. Rebate means concession and tax payment. The tax rebate is allowed to lower income persons. List of the following two. How much tax rebate will be applied? Actual income tax. So first we have to calculate the actual tax, basic income tax. Then fixed amount 12,500. This 12,500 is given by the income tax department. So whichever is less, actual income tax or fixed 12,500. Whichever is less will be allowed as exemption, rebate under section 87A. Now the tax rebate will be allowed if the aggregate of all taxable income is up to 5 lakh. This is a condition. If the total income is up to 5 lakh, then only tax rebate 87A will be applied. If the income exceeds 5 lakh rupees, no tax rebate under section 87A will be allowed. So remember, very important rule. When we solve the problem, you must remember, if the total income is up to 5 lakh rupees, then only tax rebate will be allowed. So how much tax rebate? Calculate the basic income tax on his income, or 12,500, whichever is less will be the tax. Now only senior citizen, non-senior and senior citizen will get tax rebate. Tax rebate will not be allowed to super senior, because their basic exemption limit itself is 5 lakh. Basic exemption limit itself is 5 lakh. So no tax rebate under section 87A will be applied to super senior. It will be applied only to non-senior and senior citizen. These are the provisions regarding 87A. Now types of tax rates. There are two types of tax rates. Flat rate of tax and slab rate of tax. Slab rates of tax. तो फ्लैट रेट एंड स्लैब रेट, तो कुछ इनकम के ऊपर फ्लैट रेट, कुछ इनकम के ऊपर स्लैब सिस्टम. नाउ वी आर गोइंग टू स्टडी व्हाट आर फ्लैट रेट्स. तो फ्लैट रेट ऑफ इनकम जस्ट लाइक कैजुअल इनकम. Just now I told you casual income means an income which comes through chance element, winning from lottery, crossword puzzles, gambling, betting. Yeah, all these things are casual incomes. On casual incomes, there is a flat rate of tax of 30%. Separately it will be calculated. The tax will be separately calculated for casual income because it is having a flat rate of 30%. Remember all these points. Then STCG, short-term capital gain. Remember, short-term capital gain on equity shares. If a person has purchased equity shares and sold equity shares within 1 year, एक साल के अंदर शेयर्स खरीदे और एक साल के अंदर बेच दिए, तो the gain arising will be short-term capital gain. And also on the units of equity-oriented mutual funds. Mutual fund company will issue the units. If it is equity-oriented units, then a person getting the dividend on this, or the person selling these units and gain arising, flat rate of tax, 15% rate of tax will be applied. So short-term capital gain arising on the sale of equity shares or on the sale of equity-oriented units of equity-oriented mutual funds, and gain arising, that gain is taxable at 15%. Long-term capital gain, lengthy provisions are there, but simply you remember one point: long-term capital gain is taxed at a flat rate of 20%. Then transactions of undisclosed incomes or investments or assets, 60%. If a person is caught by having an undisclosed income, then he will be put to tax. Example, if a person is found of having some 10 lakh rupees, the Income Tax Act has the right to ask him, what are the sources of your income? From where did you get this income? He has to give the explanation, justifiable explanation. If he is unable to give the explanation, it is called undisclosed income. 60% tax will be applied. Similarly, if a person is having the investment, a person is caught having some investment, Income Tax Act will ask, from where did you make this investment? What are your source of income? From where did you purchase this investment? He has to give the explanation. If he is unable to give the explanation, 60% on that investment will be payable tax slab along with interest and penalty. Apart from that, assets. If a person is having some assets, see, Income Tax Act is a tax on showing the income. If a person has escaped by not showing the income, he will be caught in expenditure. He will be caught in having the asset. अगर एक आदमी इनकम टैक्स नहीं पे करा, अपनी इनकम नहीं बताया, छूट गया, तो ये नहीं समझना उन्हें बच गया. अगर वो पैसे से उन्हें एसेट खरीदेगा, इन्वेस्टमेंट खरीदेगा और बाद में कभी अगर पता चल गया इनकम टैक्स डिपार्टमेंट को मालूम करेगा कहां से आया पैसा है, फ्रॉम वेयर डिड यू परचेज दिस वन. If he is unable to give the answer, Income Tax Act will charge 60% tax on that undisclosed asset, undisclosed income, undisclosed investment. These are called flat rate of tax. What is the flat rate? 30%, 15%, 20%, 60% flat rate of tax. Now, slab system. The next system is slab system. Under this system, taxable income is divided into different parts known as slabs. The total income of the SSC will be divided into different parts. Each part is called a slab, and each slab will have a different rate of tax. Different rate of tax. Just now I told you three types of income: casual income, special income, and normal income. What is normal income? Any income which is neither casual income nor special income. So on normal income, we apply slab system. We apply slab system. On the total normal income, we divide into parts. So for what are the different slabs? Now I am going to explain you. Non-senior citizen, an SSC who is up to 60 years of age. Up to 60 years of age, non-senior citizen. The slabs are first 2,50,000, the tax rate nil. No tax will be applied for the first 2,50,000. This is the first slab. Nil rate, no tax. From 2 lakh, above 2,50,000, above 2,50,000, 2,50,001 to 5 lakh rupees, second slab. 2,50,001 to 5 lakh rupees, the tax rate is 5%. So whatever income he is having, that income tax rate will be 5%. For example, if a person is having the total income 3 lakh, total income 3 lakh. So out of 3 lakh, first to 2,50,000 exempted. So 3 lakh minus 2,50,000, remaining is 50,000. That 50,000 tax is 5%. Tax is 5%. Second slab. So first slab up to 2,50,000 nil, no tax. From 2,50,001 to 5 lakh, whatever is the range of income, that income is 5%. So range of income is 2,50,000. Because total 5 lakh. 5 lakh में से first slab निकाल दो. First slab how much? 2,50,000. So 5 lakh minus 2,50,000. So remaining 2,50,000, 5%. Then 5 lakh 1 to 10 lakh. 5 lakh 1 to 10 lakh, 20%. Over 10 lakh, 30%. So 4 slabs. The first slab 0%. Second slab 5%. Third slab 20%. Fourth slab 30%. So first slab Up to 2,50,000, 0%, no tax. From 2,50,000 1 rupee to 5 lakh rupees. 2,50,000 1 rupee से लेकर 5 lakh rupees, 5% is the rate of tax. If 5 lakh 1 to 10 lakh rupees, 20% is the tax. Over 10 lakh rupees up to any extent, it will be 30%. These provisions will apply for non-senior citizen. Senior citizen, first 3 lakh rupees nil. Basic exemption limit is 3 lakh. So first 3 lakh rupees nil. From 3 lakh 1 to 5 lakh rupees, 5%. 5 lakh 1 to 10 lakh rupees, 20%. Over 10 lakh, 30%. What is the difference between senior, non-senior and senior? The basic exemption limit is the difference. Here first one 2,50,000. Here first basic exemption limit is 3 lakh. Now super senior citizen, a person who reached the age of 80 years or more, are called super senior citizen. For super senior citizen, first basic exemption limit is 5 lakh. Up to 5 lakh rupees, no tax, 0%, nil. 5 lakh 1 to 10 lakh rupees, 20%. 5 lakh 1 rupees से लेकर 10 lakh rupees तक 20%. Over 10 lakh rupees, 30%. So these are called the slab rates for non-senior, senior and super senior. After calculating the basic income tax, calculate the surcharge if any. So after applying these slabs, you have to calculate the total taxable income, tax, basic tax. On that basic tax, add the surcharge if it is applicable. Surcharge will not be there every case. Compulsory it is not there. Only on this condition surcharge is there. Then to that you add 4% health and education cess to get the tax liability. So these are the provisions I have explained you in this video. So I have explained about gross total income, taxable income, elements of tax. Then I have explained the tax liability and residence, different types of incomes. Then surcharge. What are the rules regarding surcharge? Tax rebate under section 87A. Types of tax rates, flat rate, slab rate, and what are the different slabs for different types of assessees. So I'll continue the same introduction in the next video. So if you are satisfied with my lecture, give a like to the video, share it in your groups, give the comments, feedback about my videos, and don't forget to subscribe my channel. I'll continue in the next video the same topic, introduction.